Hi, everyone, and welcome to UBS Trending. I'm Anthony Pastori. As the crisis in Ukraine continues, many of us have begun to have questions about energy, particularly when it comes to oil and gas. Does this rise in prices make a better case for green tech and alternative fuel sources? And how might that impact prices overall? Well, we're going to talk about that right now with my colleagues from the Chief Investment Office, Michelle Liberty and Jay Dobson, my energy team. So thank you both for joining me. Good to see you.
Great to see you. Thanks,
Sure.
Anthony.
Jay, let me start with you.
Sure.
I'm sure you're getting a lot of questions. How could you not be? Especially right now. There's so many things that we are wondering when it comes to the energy side of the story. Of course, we know the humanitarian side of the story is awful, so our thoughts are always going out to the people of Ukraine. Let's talk about the energy side, though. A lot of us are concerned about what we're seeing there from both sides. But in addition to the human toll, there are these major concerns about the impact on supply of oil and energy to all developed countries around the world. How much of oil and gas that we use here in the U.S. is imported from Russia, and how high can we expect prices to go? Because we have seen prices at the pump. If anybody's gotten gas over the last week, you've seen prices go up. I think the average right now, $4.32 a gallon is the average in the U.S. Where do we go from here, Jay?
Yeah, no, Anthony, it's the question I'm getting. People are asking, hey, what does it mean, the Russian oil now being embargoed or prevented, banned from U.S.? You know, the reality is we don't buy a lot of Russian oil here, but the key to keep in mind is, you know, these are global commodities, and the supply-demand balance was pretty tight to begin with. So now with buyers self-sanctioning or not buying those supplies, you know, we're seeing a yet even tighter market. Now, to put some numbers on it, U.S. buys about 3% of its refined products and crude oil from Russia, so pretty small amount. But again, the bigger thing is, you know, Russia is the third largest producer of oil and the second largest exporter, sort of 10-ish% of supply globally. So the real issue is, in a tight supply-demand market, we're going to see prices go up as Russian supply gets restricted. First here in the U.S., the U.K., Australia, a few other places. But perhaps, again, more importantly, buyers are refusing to buy Russian crude. So we're seeing a tight supply-demand environment tightening. Your real question, and I think it's the one that drives home for most of us, how high can the prices go?
Right.
I think the reality is they can go higher. We're seeing them trend down a little bit today, but I think as we move forward, unless you have some resolution that brings all those Russian barrels back, and I think that's hard to see, we're going to be in a tight market for a while. The CIO forecast is for $122 crude by the end of June, $102 by the end of the year. But I would say, sitting here right now, you know, risk to those forecasts are probably to the upside. And I would say, in addition to crude, we can talk hopefully about, you know, gasoline eventually, but as well natural gas, which has also been, you know, rising. There, it's more difficult to transport, so though natural gas prices are low here in the U.S., you know, we look abroad and they're far more expensive. So, you know, really the whole energy picture has gotten complicated, but is really being impacted by the tightness of the supply-demand.
Right. Well, you know, here's the interesting thing, and I think a lot of folks, I mean, this is a conversation that's happening at the dinner tables with a lot of folks, I think, especially in the U.S., is we understand and know that a lot of the oil that gets exported or imported into European countries does come from Russia. But as you said, not a whole lot of it comes to the U.S. shores. So why are prices still going up for us since we get our oil elsewhere?
Yeah, well, again, it's a global commodity, so something like WTI and Brent are set at the global level and are based on the complete global supply and demand picture, not, you know, U.S. supply and demand. So that global picture is what sets price. I mean, again, when we look at it, and you have to look at it on a global basis, we look at supply and demand and inventories, and we try and look at here in periods where supply exceeds demand, inventories grow. In periods where demand exceeds supply, inventories draw or decline. We've been watching, you know, inventories draw for the last 9 months. It tells you we were in a tight market and we're in a yet even tighter market, because even if it's a little bit, and it's more than a little bit, of global crude oil supply has been backed out of the market because of Russia.
It really does exemplify the global economy that we are all a part of now. It's not just regional anymore for many, many parts of the market. Specifically, as you just talked about, why oil is going up. It's a global commodities market. Exactly. Interesting. Thanks, Jay. Michelle, good to have you here. And look, the two of you have been on shows with me a few times in the last couple of months talking about energy. We talk a lot about alternative energy sources with you. It's a theme that we're closely following and doing research on here at UBS. So, but now with all this new news about these embargoes on Russia and what's happening around the world, do you think that this will cause any kind of a resurgence in the desire for alternative fuels, electric vehicles? What's the thought on that?
Sure, it's a great question, Anthony, and unfortunately it's just not a simple one because there are a lot of factors at play. Because if we think about over the last few years, demand for renewables pretty broadly was strong, but it's really meeting that demand with enough supply that's the challenge, and we're being reminded of that right now. So in terms of does it cause a resurgence in interest in this space, I think we are already seeing a renewed focus on energy security. And again, it's securing enough supply to meet demand. But we also have to remember that as we speak, raw materials and input prices have also risen for these industries. So it's not a straightforward picture. And even though in the US we are relatively less exposed to imports of fossil fuels, we can see alternatives like wind and solar during times like these when fossil fuel prices are high can help to offset that a little bit. But again, it's really about being able to meet that demand. And green tech, renewables included, autos specifically, have really not been immune to supply chain challenges. So this is going to be something to watch in the months ahead if the supply chains happen to become disrupted further. Russia and Ukraine are both producers of some of these input materials. Neon is used in semiconductor production, palladium, nickel, just for some examples. So again, it's really not a simple picture here. We have a lot of different moving parts. And I do think that that's something that we're going to have to watch because we can't ramp up supply as quickly as we might want to.
Right, and it's a broader commodity story, as you were saying, all these metals and different materials that are being discussed as far as where prices are going. But Jay, it's interesting, when you think about that energy transition, are there any regional differences? Because as you just talked about, it is a global commodity market now. And could that really impact global energy prices depending on how the transition to alternative fuels and alternative energies on the pace of it and how it goes?
Yeah, absolutely. You should really think of it regionally, as you point out, because there are differences. But you also have to think about it in its totality. Because in its totality, as Michelle said, renewables have been growing very quickly. We need to digest the idea that today, fossil fuels provide like 80% of energy supplies globally. So we don't just flip a switch and eliminate or replace fossil fuels, particularly in this new light. Michelle brought up this great concept of energy security. So it's not only making sure we have reliable supply, but as we're figuring out now, particularly in Europe, making sure we have a diversity of supply, that we're not reliant on any one country or supplier for it. Regionally, absolutely there's differences. Where you're a net importer of energy like Europe is, you're going to have an incentive to move much faster, even quite frankly before the war in Ukraine broke out. But I would say now there's a greater urgency to move in that direction. The challenge is, as Michelle said, is how fast can we move there? I think it's interesting. The International Energy Agency, which primarily is a fossil fuel-based organization, says we're not investing enough in renewables to get to net zero by 2050, and we're not investing enough in fossil fuels currently to provide reasonable supply. So when you stare at that forecast, a 20-year forecast, and think about it, it's really scary. It gets to that energy security issue. So we need to move faster on renewables. We need to move faster on fossil fuels. We need to move faster on technologies, because really I think what's important for our listeners are, what we want is lower carbon intensity, not less fossil fuels. Now, we'll likely use less fossil fuels as a matter of that, but when you hear the media talking about we want less fossil fuels, that's not really what we're chasing. Carbon capture, hydrogen, some of these issues may actually help the issue a lot while still using fossil fuels, quite frankly. We need to focus on a cleaner, lower carbon intensity energy while also looking at affordability and reliability.
Right. And you made a really good point, Jay. You don't flip a switch. There's so much technology, and obviously there's a lot of policy around these changes as well. So, Michelle, do you think that an increase in energy efficiency could have an effect on demand or even consumption as we look down the road a little bit towards that net zero goal that we're trying to achieve?
Yeah, absolutely. I think that's a big part of it, and I think that we talk a lot about supply, and we've talked a lot about supply today. But what we can also do is reduce the other side of that equation, reduce the demand side of the equation, and energy efficiency is certainly part of that. So I do think that we will see a bit of a renewed focus here, and this makes commercial sense too, right? So not only do consumers like you and I have an incentive to reduce our energy consumption. I know my electricity bill was higher than I expected it to be last time I received it. So I have my own incentive, but it also makes commercial sense because a majority of the cost of running a building is actually the building operations and maintenance. So 60 to 85% of a building cost are operating costs, which includes energy. So if you can bring down your energy consumption, you can hopefully lower that bill as well. So there's a commercial incentive here too. And I think if we think back to the late 70s, when we had a bit of an energy crisis as well, I think many of our listeners probably remember President Carter putting on a sweater and telling people to reduce their energy consumption and wear a sweater instead, turn down the heat. So I definitely think that's something that we will begin to see more focus on, something that we've been speaking about for some time now. So I do think that this bodes well ultimately for energy efficiency companies or companies that are exposed to some of those end markets.
Right. And it's a really good point. When this type of geopolitical event takes place, it's almost a painful reminder to us about where we could go globally, obviously when it comes to the humanitarian side of the story, but also how it could impact our daily lives and the cost of things. And maybe supplies aren't always going to be where they need to be for us to live the way we do today. So it really is a good conversation to be having, and certainly energy efficiency is something we talk about a lot, but it's almost like, well, I switched to LED bulbs and I'm doing my part, but it's more than that. Interesting.
And again, as Michelle said, everyone has an incentive. Whether you're going to the gas pump or your utility bill, you've got the incentive. And here you're helping your pocketbook, and potentially, if you make some investments,
that's right,
sort of the goal towards lower carbon intensity
if you're living on the west coast of the U.S., it's as high as $5.74 a gallon, which is a lot. So I've seen a lot of memes and posts on social media platforms from people who drive EVs and putting their thumbs up like that, thinking like, not me. So, hey, maybe that's even incentive to start to think about changing it up a little bit in the future. So great. Thank you. A lot more to be talking about in this particular space, but obviously very timely with what's going on now. Good to see you. Thanks for sharing with us.
Thanks, Anthony.
Thanks, Anthony.
Anytime. Great. We'll have you back soon for more energy talk. And for any further information on our conversation, you can visit our website, ubs.com/views, as well as our various social media platforms, LinkedIn, Facebook, Instagram, Twitter, plus all of our shows are on demand, so you can check those out on our website as well as the UBS YouTube channel. And as always, if you do have any questions about your portfolio or anything I spoke about with Michelle and Jay today, make sure to reach out to your financial advisor. Until next time, I'm Anthony Pastore. Have a great day, everybody. Remember to keep your eyes on what's trending. We'll see you soon.